Okay, so in this video, I'm going to be talking about three really important ideas that I think are often the difference between success and not being successful in Forex. These are ideas that aren't really very much touched on in other videos. I feel like so there's really long videos too, hour or two long videos, and they'll say like this is do this system right here, and you'll be profitable. And that I always see that wasn't the case for me. Some people do very simple systems and they work, and sometimes those are the best ones if you can stick to it and be good. But um, in this video, I'm going to talk about things, at least for me, that helped me a lot progress. And it was just very just like kind of little. I mean, they're big ideas, but just like a little learning about it, even just a little bit, can was a difference for me a lot. And I'll just jump right in here. And the first one for me was acquiring tools that you can use in Forex. And what I call a tool is basically any main idea that can help you decide your trades, like any technical thing, like using support and resistance lines, or candlesticks, or patterns, or um, any of the technical indicators like RSA, MACD. I just put a couple on the list here. Fig lines, Elliott waves, stuff like that. Even if you're not using them, I think it's very important because often, probably the one that's most like that for me is Elliott waves. I don't really trade on Elliott waves, but just knowing what they are, and then every so often looking at a chart and saying like, "Wow, this is a textbook example right here," and I think that's when you should be using that strategy. In certain times, you should be using different ideas to help you. And candlesticks can obviously help you. Knowing about where price might be headed is more helpful when you have a signal candle, a signal in a reversal, like a bullish engulfing or something along those lines. And same with price action when it's near support resistance, that gives you ideas. It always doesn't help you when it's not near it, but it can give you ideas to stick towards. And I think that was something very important to me. That when I was just trading price action, it was too much. Well, it basically didn't really work enough because you had too many other factors going on that changed what I was doing. And even if the idea is still basically a successful idea. And also, I think it's important to learn fundamental ideas too. And even if you don't trade news, it's just oftentimes there's long-term fundamental things like um, ideas that can, excuse me, that can help you know where a currency is likely headed. And one of the main ones, like rate decisions. If the currency is playing a cut in the rate decision, the currency is probably more likely to go down. And if you see good technicals that look like, oh, it's a good buy opportunity, it might be a good idea to hold off on that opportunity. Just one example. News, anything like GDP figures released, they can really influence short term and sometimes long term where a currency would likely be headed. And instead of just kind of ignoring it and saying like, oh, I just won't trade 30 minutes for news, or oh, I'll just, it doesn't really matter. It doesn't really change it that often. Only occasionally there's big spikes. Well, it changes a lot of times long term as well. And missing that piece of the puzzle can really was a really big difference for me too. Because looking at it, you see a good technical setup, and it doesn't work. And I found that when strong technicals meet strong fundamentals, the fundamentals will generally win that battle. I mean, that's not to say that weak fundamentals versus any technicals. I find the technicals to be better in the shorter term and setting up. But when strong fundamentals come into play, they can break down basically every other section of the technicals. And I think it's something that really was important for me to look at. It was something that was missing when I was starting out. And the other thing is knowing the risk versus less risk currencies, like the U.S. dollar, less risk in it, and its thing. It's less likely the U.S. dollar is just going to go under just like that. Of course, it could happen, but that's not the scope of short-term trading that you do at Forex. Less risk currencies, more risk currencies would be a lot of the other ones, like Aussie stuff like that. Any other basically anything that's not the U.S. and then you have like the Japanese yen and then falling down from there. More risk, and of course those are not really risky currencies. It's just they're important to understand when there's signs that things are falling down. The more risk currencies will have a greater pullback. Well, probably it maybe the only ones to pull back. Maybe I don't have a chart here, but if you look at like the S&P 500 and stuff like that, U.S. Dow Jones, you'll notice that they're more steady in their pursuits compared to a lot of the more risk assets and a lot of the more risk currencies. And when times are good, the risk assets will generally perform better. When times are bad, they'll perform worse. So it's very, very, just that fundamental knowledge can really help you, because then if you know, okay, looks like things are kind of falling apart in this country a little bit, and it affects these currencies, which of these is going to probably fall more, and that can make itself a very good trade setup just on that. And then everyone's like commodity links. Again, the Aussie dollar is more commodity linked, and then just knowing which ones are more commodity linked, which ones aren't, can be very important. In this video, obviously, all these list here, you can make a whole hour-long video and just probably longer in each of these little bullet points here. I maybe will make more videos about these, but basically getting at least the fundamental knowledge of these ideas, just these ideas. These are the ones that I thought were most important. There's other ones, of course, too. Can really help your trading game. Also, just one more thing I wanted to mention: the technicals, Fibonacci lines. I find they are the most consistently effective technical. I wouldn't even call it an indicator. Technical line setups places where taking profit or a reversal is likely to happen. And if you don't know anything about them, I'd really suggest looking up them. If you're gonna learn anything on this list, I'd learn that over even indicators or patterns or anything like that. But I think really before you start trading real money, you should probably have at least 5 concepts. Try to get at least a couple fundamentals too. Have them down, like you can recognize them and know when to use them, when they're good, when they're bad. And that's something a lot of really simplistic systems often miss. All right, the next idea I think is this one may seem kind of obvious, but practicing a real chart. So what I mean by that is really like going candlestick by candlestick through it. Usually like 2009 or earlier, or 2009 or later. Excuse me. Is usually fine. Really keeping track, either paper trail or trade simulator, and really using your system, and trying to figure out if the system you're using is successful or not, and knowing when you shouldn't use it. I feel like it's something that's missed as well in practicing real charts. I mean, you can practice in your live chart for live account, but it seems like a really expensive way to practice. When obviously any software will give you years and years of data. You can make a live account. I think for MT4, it only gives you, at least when I first started, it only gave you back to like a year until you went live. But when you went live, you didn't have to trade, of course. And And even keeping a paper trail. That's what I did, and I thought it was helpful. Just writing down, okay, entering here. Sometimes even writing your reasonings because it met these requirements in my system, and I saw this and this, and this is why I thought it was a good thing, and I'm taking profit here, keeping a good risk reward to the trade, and really helpful. And the last idea is kind of connected, is when people talk about systems and strategies, they say you need the more talk. I see all this emphasis, almost too much. And I think it is important, discipline in your system, but they always say like you need a proven profitable system, and you need the follow up to the T. And then it's talking about how you need to have really good discipline, and not because you see things, or you think you get chicken out of your trade or take profit too early because of something, you're just watching it go on. You should follow your system to T if it's profitable, and then you'll be profitable. The thing is, what is a proven profitable system? Is a strategy or a system? What markets does it apply to? It's going to be at the practicing. That does your system apply to? And is it ranging? Is it better ranging? Is it better in trending? Is it not profitable at all in one, or is it okay in both? What should you look out for? What things totally should you totally abandon when using your system? What meaning, like, what times does your system totally break down, essentially, and not work? And also the whole point of saying it's proven profitable. How much proof do you need? How many years? Is it just like the last 3 months? Is it a short-term system? Is it the last 3 months on the 5-minute chart? Does it need to show profitability? Or is it a daily chart system the last couple of years? It's a tough question, and I don't think many people have an answer to it. I never really even thought about it. Often just use known systems or strategies that look at a couple of charts and like, oh well, this seems like this works, and I feel like that's not always the best way to go about it. Knowing when a system is successful or not is one of the key things, because if you're using even if your strategy and system is it works at all, but you want to use it when it's most effective and give yourself, and also looking at this, another idea I should have made a bullet point of it, is your risk to the strategy. And if you have a profitable system, but its drawdowns is huge, is like your whole has a possible drawdown 100%, then I would not call that system profitable, because in your little set, assuming, if you had like $1 billion or $1 million to invest, you could trade in really small amounts and you'd be okay if it's someone who uses a lot of trades. But assuming like you're investing not a huge amount, it's not going to be a strategy that could really be useful to people, and you're going to get frustrated. You're going to use too little amounts and not really be making any gains, or you're going to be using too big amounts, and then your drawdowns are going to basically bankrupt your account. And that makes that system in itself basically not work, even if the foundation of it is successful. And I'll wrap it up on that note. If anything, these ideas, like I said, I'll probably post a video about these ideas more. But these are things that at least I've really missed in Forex when I was learning. So, assuming if you're coming from schooling, it's probably you probably don't need to. But if you're learning a lot of people self-learning, self-teaching yourself. It's very important ideas. And good luck trading, everybody.